Welcome to our video on black swan events and investing. As an investor, it's important to understand the potential impact of black swan events on your portfolio. In this video, we'll explain what a black swan event is and discuss its relevance to investing. Part 1. What is a black swan event? A black swan event is a rare and unexpected event that has a major impact on society and the economy. The term was first coined by Nassim Nicholas Taleb in his book The Black Swan. The impact of the highly improbable. Black swan events are characterized by their unpredictability, their severe impact, and their retrospectively obvious nature. Examples of black swan events include the 9/11 terrorist attacks, the global financial crisis of 2008, and the COVID-19 pandemic. Part 2. The impact of black swan events on investing. Black swan events can have a significant impact on the stock market and individual investments. When a black swan event occurs, investors may panic and sell off their investments, leading to a market downturn. This can cause significant losses for those who are heavily invested in the market. Part 3. Strategies for investing in the face of black swan events. Investors can take steps to minimize the impact of black swan events on their portfolios. One strategy is diversification, which involves investing in a variety of asset classes, such as stocks, bonds, and real estate. This can help to reduce the impact of market downturns caused by black swan events. Another strategy is to use stop-loss orders to automatically sell investments if they drop below a certain price point. This can help to limit losses in the event of a market downturn. Thank you for watching, and please subscribe to see more investing-related videos.